Now, the coalition government promised to clean out the banking system after the failures of many senior figures, from RBS's Fred Goodwin to Lord Dennis Stevenson of HBOS. And the Parliamentary Commission on Banking Standards, set up by George Osborne last July, is due to report tomorrow. The report apparently contains a section which charts the banking industry's resistance to reform, as well as a series of recommendations to put a rocket under their governance. Our economics editor Paul Mason's here. Paul, what have we learned tonight?
Well, Kirsty, this report is under embargo for midnight plus 1 minute. But fortunately, the newspapers which we have here have kind of printed the gist of it. And the gist actually is something that will probably raise a cheer in many a pub, but not a cheer in many a bank boardroom. And it simply is bankers who do wrong should be jailed. It is the idea that you give specific responsibilities to specific people in banks. So you're the guy who's there to stop us rigging LIBOR. If we rig LIBOR, you either get sacked, banned, or in the worst case, go to jail. What? This is one absolutely massive change of focus. Of course, this is just a committee in Parliament.
I was going to say, there may be a cheer in the pub, but it may be a kind of hollow cheer, because will any of this actually happen?
Well, this committee has kind of gone rogue. It wasn't set up to do a lot of this. It's chaired by a prominent Conservative MP, Andrew Tyree. It's set an agenda about naming and also bringing what you might call quite a small c Conservative agenda to this, i.e. personal responsibility. We've focused for 5 years on structure and restructuring the banking sector. But as I've been finding out today, this change of emphasis is kind of in the air because essentially many people think that the structural changes that we've done so far just won't work on their own. A brief history of British banking in the last 10 years would include the following. Banks missold payment protection insurance and now owe us about £12 billion. Then a series of catastrophic management errors led to the collapse of Northern Rock, Bradford and Bingley, and the nationalisation of RBS, HBOS and Lloyds. The taxpayer bailed them out to the tune of £133 billion. The Bank of England printed £375 billion, which it gave to the banks, but they didn't lend very much to British business. Then they were found out manipulating the world's most fundamental interest rate, LIBOR. If, surveying the recent history of banking, finance and insurance, you come to the conclusion that the whole thing might be something of a scam perpetrated on its customers by an unaccountable elite, then from tomorrow, you're not alone. MPs and peers look set to go further than any government has ever gone in stating that the industry has failed and needs even bigger reform. At the heart of the problem is what to do about bankers who fail. Fred Goodwin walked away with his pension, Sir James Crosby kept his knighthood until forced to hand it back. Bob Diamond, the boss of Barclays, departed after the LIBOR fixing scandal cost the bank a $430 million fine. It's understood that the Banking Commission will tomorrow call for bank bosses to face jail time if they fail to run their businesses correctly. That goes way beyond anything either Labour or the coalition has demanded and would change the culture of the city big time. But would jailing people do any good?
Well, banking is a trust business. It is important that customers see that individual responsibility is held to. But this isn't and never was about a few bad apples and jailing a few misbehaving bankers. This was about a whole system that was going wrong because of bad incentive and structural problems. And the more important question is, are those going to get addressed as well as holding individuals to account?
In the meantime, there's the sticky problem of what to do about the banks the taxpayer owns. Tomorrow, George Osborne is set to announce his plans for RBS and Lloyds Group to be privatised, and where else to announce it but at an invite-only audience of bankers in bow ties. But Parliament too will want to say. The MP's report tomorrow is likely to call for RBS to be broken up. And they'll call for a new effort by the competition authorities to break the stranglehold on the high street of the four big banks.
To really improve the structure of the UK industry, we need to have many new entrant banks coming in. That's beginning to happen. But we need to grow the community banking sector, including credit unions. That's beginning to happen. But to really have an impact at scale, we've got to ask ourselves a question: what's the best thing for the whole UK economy to do with RBS? And that might include breaking it up into regional banks. It might include keeping it in public ownership. It might include giving it a mandate to focus on SMEs. We've got to examine all those options.
Up to now, the solutions proposed for the British banking industry have been structural. Separate this bit from that bit, impose new capital controls. But if MP's recommendations tomorrow are acted upon, we could see for the first time a top banker being jailed. Though whether the fear of ending up in Wormwood Scrubs would have stopped the subprime crisis is anybody's guess.
Paul Mason, well, I'm joined now by Sir Martin Jacomb, a former Barclays Deputy Chairman, Lisa Beyer, who is the Senior Investment Director at the wealth manager Investec, and Laura Willoughby, Chief Executive of the campaign Move Your Money. Sir Martin, this has come because of this avalanche of disasters, hasn't it? Billions of money, pounds of taxpayers' money gone, manipulated LIBOR, manipulated key rates, mis-selling, and nobody was really held responsible. The banking sector's got itself to blame, hasn't it?
I think to say that nobody is responsible, nobody's found responsible, is incorrect. But you're talking about yesterday's disasters. All the banks, all the major banks now are run by different people with a different ethos, and the bad apples are no longer in charge.
You say it's yesterday's crisis and the bad apples are no longer in charge. So therefore, presumably then, if there is indeed in this report a recommendation that charges be brought against bankers who are incompetent and they would then go to jail, do you think that would be a fitting punishment if there are further problems?
Well, listen, I haven't read the report, so I don't know what it says.
None of us has. It's midnight.
So I don't know what it says. But I'm all in favour of people who make big mistakes with other people's money, getting into personal liability.
And going to jail?
Going to jail is completely out of the question right now, because first of all, you have to find an individual guilty of some crime. So let's talk about liability rather than going to jail, which is well over-dramatising it.
Would you like to see, as it were, bad bankers going to jail?
Certainly bankers should be taking responsibility for their actions, and we believe that very strongly. We've seen huge numbers of people's lives being affected by their decisions.
Responsibility for their actions. I mean, you can take your responsibility for your actions and just resign. It doesn't help people get their money back. If there's the threat of incarceration, presumably, that would actually bring a chill and actually would perhaps make sure that some of the boards and some of the individual bankers and committees don't act irresponsibly.
Yeah, absolutely. There should be prosecutions. There should be prosecutions for the mistakes that have already been made. And people should know that when they're making big decisions with other people's money, there is a responsibility and there are consequences.
You actually, I think I'm right in saying, recommended the Co-op Bank.
We did. It's one of many banks we encourage people to move to.
It was top of your list. It was top of your list, and look what's happened to the Co-op. So that model's not right either. The Mutual's not right either.
Well, mutuals are far better. Co-op's found its own solution. And more importantly, it shows that just growing and growing and growing our banks until they become so big isn't the answer. Actually, what we need are local banks committed to growing the local economy, lending. I mean, the 5 big banks aren't lending to businesses at the minute. They're not actually offering very much to the economy. If we really want to change banking in Britain, we need to change the structure of banking and get them lending locally again. Small banks are actually going to be our saviours.
Elise, do you think there is a different structure, a new model that perhaps we haven't thought of yet?
No, I think probably we're going back in time, having spent almost as much time as Sir Martin in the city. The fact is, what you did was grow the banks in a way. You moved your joint clearing banks, your very ordinary high street banks, and you moved them together with your investment banks. And what I think has happened is it's not working. It hasn't worked, and you're looking at 2 different cultures, 2 different ways of operation.
So it's separation. So separation is the answer.
I think to some extent you've got to get back to what ordinary banking is, what people in the street need. What they need is somebody to talk to, and I think we've gone away from that.
But Lord Jacomb, do you think separation is the answer?
No, I don't. And first of all, just let me say that when people talk about prosecuting bankers and sending them to jail, that's a last resort. What's really important is that they're responsible with their own money to repay some of the liability. So talking about personal liability for people running banks is much more relevant than talking about them going to jail.
But what about separating retail for investment?
But I don't believe in that. If you take the situation right now, facing this economy, when money is not flowing to business because banks aren't lending. The reason they're not lending is because they're required to hold a mass more
Big capital,
capital, and they can't get any new capital, and therefore they have to restrict lending. So what you need to do to substitute for that is what happens in the United States, which is that the capital markets provide the funds for business, and that comes from the investment banking operations. And if you want it working really well, you get the commercial bankers and the big banks to say to their investment banking colleagues in the investment banking division, this is an opportunity for you to issue bonds on behalf of a company which needs money.
What about that? That's a solution for you?
No, I mean, at the minute, the big banks have got government money to lend to businesses and they're still not doing it. There's something fundamentally wrong with our system. We need banks to get back to where they should be, which is keeping people's money safe and listening to customers.
But hang on, it's not
At
about
the minute,
keeping
there's no
people's money safe.
competition.
It's actually, people put money in accounts to see it grow. And if it's not growing, perhaps they think actually having some of the investment bankers doing a lot of work with the money that they let, what would be wrong with that?
But the balance is tipped the wrong way. What they're more interested in as banks is using your money to make more money. What we're saying is at the minute, there's no competition in the market, so there's no incentive for them to actually be nice to their customers at the other end, treat them well, make sure that they're lending, make sure that they're helping people save, making sure they're growing the local economy.
Is there a moral position that the bank should be forced to take about that actually they should be doing good deeds, as it were, for their customers?
I don't think they would put it quite like that, but what I think you need money going back into industry, and you need money to go
And
back to
SMEs.
customers. Yes, but what you've got at the moment is a terrific lack of confidence in your bankers, and that I think is very bad. That's undermining what's going on.
So how do you restore confidence in bankers? I mean, they're the same breed as other people, and yet they're not trusted.
I think what they have done has made people mistrust bankers, and I think what they do essentially is a good job. The idea is to put money into the economy, to lend to businesses. That is all very positive. But in what's happened since, say, 2008, they have lost confidence in their bankers.
So Martin, you've got the same bank since you were 16, haven't you?
Yes, I've had an account with what's now the NatWest Bank, part of RBS. I've had it since I was 16 years old, which is a very, very many decades ago.
But why do you trust
what I
them?
would say is, if I could just interrupt you, is that one of the things which I think I would like to see improved comes from right here and the other media. Mervyn King, the retiring governor of the Bank of England, said last month, and not a moment too soon, it's time to stop demonizing bankers, because as long as people go on demonizing them, they can't behave as bankers really.
But you know what? If more senior bankers like you would come on television programs and explain themselves, then they would appear much more transparent.
Well, I don't think transparency is particularly important. What happened was a lot of very big mistakes were made. They were made in the past. The changes in management have been made, and it's time to get on with lending money to business.
Thank you all very much indeed.